Great. So welcome you all once again to the continuation for a short break. Good. Now to continue the game, we ended at the notes. We ended at one of the notes. So let's continue scanning through the footnotes. We ended at the note 4. So we are going to look at note 5. Now note 5 states that the buildings in the trial balance has been leased out for rentals. Wow, it has been leased out. So when I mention leased out, what comes to mind? Why would you acquire the property and then you decide to rent it out? So what type of property is it? It's building, right? Good. When there's a full stop, have you seen that I've stopped? Good. So the building net trial balance has been leased out. So that means it's an investment property. Perfect. Now the fair value of the building has been assessed at what? Good. Has been so now the fair value of the building has been assessed at 1.05 billion and the fair value has not been what reflected in the trial balance. Good. So that is the closing balance. It has been assessed at 1.05 billion. So first, once it's in the trial balance, you have to go and compare. For investment property, changes in the fair value is reported in the P&L straight. Whether it's a profit or a loss, it will go to the profit and loss. So first, go and check the figure in the trial balance. So in the trial balance, if you check the building at fair value, 1 million, that's 1 billion. But the footnote is 1.05 billion. So here, what do you do? So there is a gain or a loss on this valuation. So you compare. Let's go to the board. So here you compare the value at the start. So this is investment property. So investment property, fair value at the start is 1 million. So at start, so brought down. So fair value at close or at the end of the year is 1050 million. So there's a gain of what? 50,000. When there's a gain, the gain will go to other income. When there's a loss, loss goes to operating expenses as usual. For the operating expenses, it is hosted for all losses. All losses. Good. So, so in short, the gain of 50,000 goes to other income. Then for financial position, you record the fair value at the end of the reporting period, which is 1050. That's 1.05 billion will be in the trial. As a financial position. That's what we're going to record it. Good. So basically, that's how I'm going to treat this. If they have received the rent, because they say it's for rental purposes, this is investment property. How do you know that this is investment property? For investment property, it must be a land or a building. It must be a land or a building. That's the first uh, principle. Yeah, this one qualified. Then second, it must be a property that you've acquired not for sale or not for use. So any building or land that you've acquired not for use in the organization or not for sale, but what for? So why will you acquire a building that you say you're not going to use it or you're not going to sell it? Then it's for two reasons. It's for two reasons. One, for rental income or capital appreciation. Capital appreciation in a sense that you're waiting when the value appreciates, then you sell it at a higher amount. But now they are not selling. They're just waiting quietly. As soon as the value appreciates, then you sell. That is how investment property works. So if you use fair value model, under the fair value model, one, we don't depreciate the investment property. And a fair value model, one, we don't depreciate the asset. So one, no depreciation, and a fair value, no depreciation. That's why the examiner did not waste his time to give you the depreciation policy or code, no, for that building. Then two, every year you measure the fair value. Any changes in the fair value, gain or loss, you report it in what? The profit and loss. Any gain or loss goes to the profit and loss. Unlike the revaluation gain, that one goes to OCI. That is the difference between revaluation gain and then the OCI. Yes, we should know more about that. That is the fair value gain under IS 40 and revaluation surplus or revaluation gain under IS 16. Different treatments. Good. Okay, so that is it. Now let's continue the game. Note 6. The company rented office premises with effect from 1st July 2019 at an annual rental of 6 million, which is yet to be paid as a result of financial constraint. Good. So here, they are owing. They entered into rental agreement to rent some space. And then the total fee for the year is 6 million annual, which is yet to be paid. When will it take effect? 1st July. So it means that because of July, we have parent account when? December. So from July to December, how many months? So for this particular year, only 6 months of the rent must be reflected. Only what? 6 months of the rent. Why 6 months? Because from July up to 2019, July 2019 up to December is 6 months. Good. So that's why the dates or the reporting year is a bit critical. Can make a lot of changes. Okay, so what we do is this. This is the financial year. January, December. Yes, so this one is June. So from here to here, so only 6 months. So that will be 6 out of 12 times the 6 million. That will give us 3 million. So how do you treat this 3 million? What is the accounting treatment? So it will be the 3 million or 3,000. Two treatments. So you write it against it small. This one is an expense. Here they are renting. They have to pay. So to be an expense to them. So first, it will go to the operating cost. That's the first leg. So you write small against it, operating cost. Half. Then again, have you paid for it? No. Is it a plus or it's minus? It's a minus because we are doing what? Owing. So it will go to current liabilities. It ends there. So after adding it to operating expenses, it sends to current liability. It ends there. The same figure, 3,000, 3,000. So write small against it, operating expenses and the current liabilities. Okay, let's go to note 7. The outstanding taxation balance. As soon as you mention tax, don't forget the principle, the card. So it says that the outstanding taxation balance in the trial balance represents an amount payable to the Ghana Revenue Authorities in respect of 2018 corporate tax. This one is owing. This is not under or over. No. It's like last year, the tax that you paid is not enough. Great. So before I continue, as soon as you read the tax footnote, all what should come to mind is this. Don't forget your CUD. Current year tax, under or over, yes, and deferred tax. So these three items, put them together. Current year tax, under or over, and the deferred tax. Good. So current year tax. As and when you are reading, just be fishing them out. That one is the corporate tax that they've provided for that particular year, the year in question. So let's continue reading. But this 20 million, the outstanding taxation balance in the trial balance represents an amount payable to Ghana Revenue Authority in respect of 2018 corporate tax. So I'll pause and go for that figure. So tax. So you can see taxation here, the last figure. That's the 20,000. That is what they are referring to as the balance, representing an amount that we owe coming from last year. Any liabilities don't go to liability does not go to P&L. So we should take note. Liability goes to the financial position. So let's observe that. So now this figure, they are saying that it represents an amount that they owe. Yes, that's why it's at the credit side. In respect of last year's tax. So it will be part of the current liability items because you are owing them. So we look at it. Now let's continue the footnote. It says that provisional assessment of taxation for 2019. That's a current year tax provision. If you don't see current year, they will quote the date for you. So you pick the year in question. Estimated to be 24035,000. So to be 240,360. And this becomes what? Good. So that's the current year tax provision because even though they didn't say current, they say corporate tax provision or tax assessment for 2019 has been, so we call great. So even though the current year is not there, but they've included the year in question to be 2019. That is perfect. So this is the C. So the C is 240375. So the C will be 240375. That's the current year tax. Then you go again, look for under and over. If it's there, you pick. If it's not there, you leave it. Good. Now the next statement states that as at 31st December 2019, the accounting base and then the tax base of the asset of the company that will create temporal differences amounted to 12 million and that of 9 million respectively. The corporate tax rate is what? Is 25%. Now, the D is the deferred tax. We said that the deferred tax, you have to pause. You go and do your workings. So when you pick the deferred tax workings, workings will do workings. Bring the open balance, compare, leave a line, and make the closing balance. You compare the open balance to that of the closing balance. The movement is what we take to the P&L. So the movement, so the balancing figure goes to the P&L. Good. So that's what we are going to record here. This is the figure. This one comes here. Like it. Now, how do you find the closing balance? For the open balance, it's always in the trial balance. If it's not there, zero, dash, doesn't given. But the closing balance, how do you get it? That one, they will give you the figures to calculate the temporal difference. So the closing balance is nothing but the temporal difference multiply the tax rate. How do you get the temporal difference? Temporal difference is the difference between the tax base and the current amount of an asset. So that's a temporal difference. Good. So difference between the current amount. So they'll give you two items. Just find their difference and then strike the 25%, the tax rate of it. Then you are done. So basically, so the closing balance is nothing by accounting base minus tax base times the tax rate times the tax rate. Perfect. Times the tax rate. Good. Now let's back it with what? Illustration. This particular question. Yeah, what is the accounting base? 12 million. Tax base is 9 million, respectively. So the accounting and tax base. So they've given us the accounting base and tax base. Good. So we just have to find the difference. So in short, for deferred tax, look for two figures. One is accounting base or temporal, or the temporal difference we're giving to you. The accounting base versus the tax base. Accounting base is the same as what? Current amount or the book value. So accounting base is the same as what? Accounting base or book value or current amount minus the tax base. All this answer times the tax rate. That is what will give us the deferred tax provision. So that's what will give us the deferred tax provision. Good. So that's what will give us the deferred tax provision. So we should take notes. Now, in the event where they've not given you this two, accounting base and the tax base, then they will perform the calculation and give you the answer already. They will calculate it and give it to you in the question. So in this question, the accounting base has been given to be what? 12. Tax base is what? 9. So there's a temporal difference of 3 million. Then you multiply this 3 million by 25%. And that will give us 750. So here the closing balance will be what? 750. Now, open balance, it will be in the trial balance. So you go to the trial balance, look for deferred tax. So let's go to the trial balance and look for deferred tax in the trial balance. But let me clean everything here and do it well. So working for deferred tax will be something like this. Tell the examiner that the open balance must be in the trial balance. If you go to the trial balance, it's cash through and there's no open balance or there's no deferred tax. So let's scan one after the other. No open balance, no deferred tax, no deferred tax. Yes, no deferred tax. So therefore, you put dash here. Good. Then you leave space, then you write a closing balance. The closing balance is what we have to calculate. You open your brackets. The accounting base here is 12 million, so 12,000 minus the tax base, which is 9 million, times 25%. Whatever the answer will be, you record it here, which is 750. Okay. Which is what? 750. Perfect. Okay, then you compare the 750 that you have here to that of the open balance. So what will go there? So the movement is 750. So you put a 750 here and write P&L. Preferably to go to income tax expense. So this figure come and put it here. So here will be what? Deferred tax, 750. In fact, honestly speaking, this question, there's no under and over. Because they have given us everything, or you've read everything in the footnote, but there's no what? Under or over. So I write a 750 here as the deferred tax. So I write deferred tax. So if I should end here, CU is dash. So 1, 2, I'll put them together. Whatever answer I get, that is will be my income tax expense. That will be the income tax expense. Then after getting that figure, you send that figure to the statement of comprehensive income. Then you come back again after short relax. You come back again. Then first, this figure, the closing balance of the deferred tax, it's always a non-current liability or a non-current asset, depending on which one is higher. So if the accounting base is higher, it will create what? Non-current liability. The reverse is true. That means if the accounting base is lower, it will create non-current assets. That will not create liability, to create concurrent assets. So we should take note of that. That's the first thing. Now we'll go to the balance sheet. Second, this very one, if there are any owings coming from last year, maybe last year there's an amount that they are owing, I'll add it to this figure and send it to the balance sheet. So this question has something like that. They have informed us that the taxation shown in the trial balance represents an amount owing from where? Last year. So to get a provision, to get a tax liability at the end of the year, tell the examiner that the open balance at the start of the year, they were owing 20,000. Is the taxation that we look at it. And then during 2019, they've made a provision again of what? 240,375. So if I should end here, what will be the total provision? This is a bit okay. Here, open balance is 20,000. During the year, we've made additional provisions. So that will increase the amount that we owe the tax authority. We said that the tax is what? The current year tax is an estimate that we do. So it's a provision, we've not paid. So you add the two together, then get 260,375. So if I should end here, this is the total amount due for taxation. Then you check the trial balance. If they have made any payment, can you net it off? Good. Then let's go and check whether they've paid any of this value in the trial balance. Tax paid, tax paid, tax paid. Is there any tax paid? Yes, it's tax paid. 165,000. So basically, you less, okay, so less what? Tax paid. 165,000. You take it off. So get something like 95,375. So this will be taken to current liability as outstanding tax balance left to be paid. So we are owing the tax authority that amount. Good. So that's the end of the game. It's longer taxation is concerned. So let's move on to the next note. So that's how we will deal with this particular footnote. Now the next footnote says that provision for doubtful debt is to be estimated to be 10%. Yes, also provision. So here we just have to find 10% of the receivable figure at the end of the year. So it means that we have to just pick the 10% of so this provision will strike against the receivable first. All provision move in line in the same direction. So down until you find the opening balance, you compare the closing balance. So write small against it. One, it will affect operating expenses, and so provision for depreciation affect operating expenses, and then the trade receivable. So the provision for bad debt affects everyone here. Okay, great. So that note, that's the end of the game. So I'll give you just a minute to scan through this trial balance and tell me what are new. So let's scan through the items and know the treatment. Please make sure that all the items in the trial balance, you know where to go. Go and then put it there for us. We are done. You should know where all the items, one after the other. Share capital will go to changes in equity or the equity section. The venture will go to non-current liability, capital surplus, equity, income surplus, equity, building at fair value, investment property. So it goes to non-current asset. Now you are scanning through for two items, items that you are familiar with it. You move on. And then two items that you are not familiar. Office equipment. This is the cost, 750. Delivery van is there. Depreciation of office equipment as at 1st January 2019. That's the accumulated depreciation. Inventory at the start of the year. That means there will be purchases. Purchases and inventory move together. Open inventory, they move together, whether stated or not. Then the corporate tax paid, if you look at it, purchases and sales, so sales and purchases. Then wages and salaries. Then repairs of delivery van, sales promotion, advertising expenses, general expenses, debenture interest, all of them are there. Good. So what about the interest on fixed deposit? What item is that? Interest on fixed deposit. So this will be, it's at the credit side. So it's an income. Interest on fixed deposit, that's income, other income. So now we are done. After scanning through like this, now you have the question, we have the requirement to avoid deviation. We've read the requirement to avoid deviation. We have also gone through all the footnotes. We have also scanned through the trial balance, and all the items are usual. So you go straight to the game. So right from here, take another 2 minutes again. Please, maximum of 5 minutes so that scanning through. Take another 2 minutes. Let's go to the financial position and start a demarcation. Kindly demarcate your financial position before you start the work. Demarcate. It means that go to the statement of financial position on that road. So statement ZAMSI. Statement of financial position. Statement of financial position. Statement of financial position. Assets. Where do you start from? So first, write non-current assets. So let's do. So kindly open. So kindly do that for me. So your answer booklet, where you wrote the non-current, the statement of financial position, let's go to non-current assets. Immediately, write PP, property, plant, and equipment, and leave it. If I've scanned through the trial balance very well, you should be able to know some few items, some items that will be there. So leave at least 2 to 3 lines. So 1, 2, 3. I come and line it like this. I'll not write anything there. So I'll leave 2 and maximum of what? 3 lines there and align it. That's the total on current assets. Then I'll move on quickly to current what? Assets. For current assets, I know some of them that they must be in the question. 1, inventory. All right. Trade receivable, I'll write it. And again, I'll leave lines again. 1, 2, 3. I'll leave 1, 2, 3. Then I'll underline it and bring it here again. And then this one becomes the current asset. Then beneath it, I write total asset. Now, when I write the total asset there, the figure will be here beneath the current asset. I won't write anything there. Then you continue again. So right from the total assets, then you come to equity. Under the equity, There are basic three items. Look at the question. Check the trial balance. Check the first item. Usually is what? Share capital. So record it first. So share capital or stated capital, whichever one is written there. That will mean the same thing. Empty. Then there must be retained earnings and capital surplus. Retained earnings is also called income surplus. So check from the question which of them the examiner has stated. So if you check the trial balance, which one do you see in the trial balance? When I check, they call it income surplus. So I record income surplus here, empty. Then if there's capital surplus, we bring it. Capital surplus is the same as what? Revaluation surplus or revaluation reserve. Empty. Underline it. Get a total. Move on to the game. Go to non-current liability. Non-current liability. Check the trial balance. If you have non-current liability. So I've gone through the trial balance very well. You should be able to tell us some of the non-current liability. Or leave three lines. 1, 2, 3. Underline it. Put the total there. Continue the game. You go to current liability. That one, as soon as I underline it, you write to trade payable. Trade payable. That one, there will be no note affecting it. So go to the trial balance and go and pick it. But the question that is not down with the profit after tax, you are picking figure to the trade payable. Yes, that's how I'm supposed to do it. So you pick the one that with no notes. So trade payable. It was given as what? So receivable and payable. So that means the receivable is the first one. The second one is what? The payable. Good. So payable is 75,000. Payable is 75. So I'll record it here. No note to affect it. Another item, under the non-current liability, check whether there's a debenture. Good. If there's no note affecting the debenture, they didn't say anything about it, write it. If you check the question, always check the non-current liability if there are no notes affecting it. So let's go and check the non-current liability, the debenture. Good. So 20% debenture. They didn't say anything about it, so it's free figure. I record it in. And then non-current liability. So 20% debenture. 400,000. I'll put it in. Great. Then you leave it there. So now you know where your financial position will end. So that the next page, so right after here, the next page, go and write boldly workings there. So now you know confidently that your financial position will last up to this section. Good. So that the workings will start from the next page. That is all. So now when you do this, before you come to the profit and loss, so let's go and start with the comprehensive income. So please make sure that you have this skeleton down, because I will not have it, I'll clean it. Any figure that will have impact on the financial position, you record it. Please, you don't need to finish the profit after tax before you're going to take another additional 30 minutes to come and do the balance sheet for us. No, that's not the only question that you're going to do. So you do them at the same time, simultaneously. If you perform any adjustment and certain figure have to go to the balance sheet, go there and go and put it there. So by the time you are done, in fact, about 80 to 90% of the job is done. Left with only two. In fact, if you do post it well, if you post everything well, by the time you get to profit after tax, or the other comprehensive income, it should have only two items. One, income surplus. Two, and then PPE schedule. If you go by this approach, by the time you finish profit after tax, left only two items that you've not touched. And those two items, if you can move on. Yes. If you want to get 20 over 20, then you continue. So that is it. Great. So I'll take them off and do the profit and loss here. So let's come and start the actual game. Now take 2 minutes to do this, to do the demarcation. That one will allow you to finish the paper within 30 minutes. Because first, you are using 2 minutes to read the question, to write the name of the company and the requirement, 2 minutes. Use another 5 minutes to read the footnote to determine where to affect the impact and then the area. Use another 2 minutes to demarcate the financial position. That's the step. So 9 minutes is gone. Good. But you have set the tone. Then the remaining 21 minutes, that's the actual work. Wherever you go to, you end it there. So let's see. So that means you're going to use 21 minutes to look at this, if possible. You have to spend 30 minutes on each of the work. So our Zamzi Limited. So Zamzi Limited. Let's go talk so that. So Zamzi Limited. For this one, we've recorded it already, wrote it already, just that I changed the board, so I have to recopy the heading again. So statement of comprehensive income for the year ended December 31st, 2019, my currency. So where do we start from? First, sales revenue. So let's go and pick the sales. No footnote affected this particular question, no footnote. So go ahead. So sales. So let's go and pick the sales from the question. So the sales figure is what? 3.8 million. When they do it this way, the very first one is for purchases, the second one is for sales. What if it is asset? Maybe a written building here, and then both debit and credit, there's a figure there. Yes, 300, and yes, let's say 25. And a written building. So the one on the debit side is the cost. So cost of the building is the debit side. The one on the credit side is what? Is the accumulated depreciation, whether they state it or not. If you see any building or any of our assets, the PPE at the credit side, it represents what? Accumulated depreciation. So take note. It represents accumulated depreciation. Okay. Or sometimes to like input you, just okay, into brackets, the cost is 45. And then in the trial balance, they'll put 30. So it means that the cost is 45, the current amount is 30. So depreciation has been subtracted already. That's the implication. So do take note. So the sales is 3.8 million. There's the cost of sales, right? Cost of sales. So let's look up at the cost of sales. So that's our first working. So working is 1. So I'll clean these sections and do my workings here, but please, you will have it so that any figure, once you are doing the workings, by all means, some figures have to go to the balance sheet. You don't need to finish the profit after tax before you now ask the examiner. The invigilator, they should give you time to post your item to the financial position. No, please, time will not be at your side. The workings boldly on top. Workings 1 is on cost of sales. Then record the figures here. Don't forget your 3 zeros. You check whether they have given you cost of sales in a trial balance or they've given you purchases. We saw purchases. So it means that we have to work the cost of sales ourselves. We have to work the cost of sales ourselves. Good. So when you see purchases, they'll not give you the cost of sales. You have to work it yourself. How do you work the cost of sales yourself? First, you start with the opening inventory, which will be in a trial balance. If purchases is in a trial balance, they'll give you the opening inventory. If you see purchases in a trial balance, the inventory figure is what? Open. So let's go and then pick it. So inventory, yes, it's 40,000. So I'll go and record it. 40,000. Then I'll go to that is open inventory. Then I'll go to my purchases. Then I'll add purchases. Purchases. Now the purchases still the same trial balance. I'll go and look for it. So the purchase figure is what? 2.2 million. So I'll pick it 2.2 million. So 2,200 like this. Then I ask myself, what is the closing inventory to be in the footnote? So let's go quickly to go and pick the closing inventory. Now the closing inventory happen to be in a footnote. That's the note 2. They say inventories as at 31st December. When the open inventory is in a trial balance, closing inventory have to be given to you in the footnote. So this is the closing balance or inventory at the end. Inventory as at 31st December 2019 was valued at 50 million, including obsolete inventory, amounting to 10% of the total inventory value, which should be written off. Wow, this examiner is good though. As even inform us what we should do. He said it must be written off. We could have ended here, which amount to 10% of the total value. Full stop. Now, if the inventory has been outdated, then it must be written off. So you find 10%, you take it off. Whatever remains, that becomes the closing inventory. So 10%, so if 10% is written off, then the remainder, leave it what 90%. Because if 10% is written off, leave it what 90. So you just pick 90 of what? 50 million. That's the closing inventory. 90 by 50 million. And that will give us so closing inventory. So closing into bracket 90% times 50,000. So therefore, the closing inventory, the value must be what? 45 million. you subtract. Now you ask yourself, is there any other note again in the question that will affect cost of sales? Anywhere again they've mentioned cost of sales? Or any note that we said, okay, we will charge you to cost of sales? No, we don't have something like that. Okay, so if you don't have something like that, what do? Then we sum them up. So open inventory plus the purchases less the closing inventory. What do you get? Yeah, with the closing inventory, they can also give you the NRV. Then you compare and select the lower. So in this question, it means that the NRV of the 50,000 goods is 45,000. That's the implication. So here, what will be the cost of sales figure? Okay. So if sum them up, this is what you get. So 21950. Good. So 219,500. So that is it. So I'll come here, come and put it in. Immediately, don't even finish. This is the closing inventory. You've gotten it. So go to the balance sheet, the inventory section. Kindly put 45,000 there for me. So let's do that. Kindly go to the financial position. Under the current asset, inventory, it was empty. Put 45,000 there. To go to the financial position. You should not wait before, after everything, before you post it. It will take another time again. Do that at the same time. As soon as you are done with the profit after tax, at least you posted an average 95% of the items on the financial statement. So post them as and when you move. So I hope you've done it right. Good. If I've done that, then when you bring this figure here, so 219,500, put it in brackets. Then you subtract, then you get your gross profit. Okay. Perfect. So with the posting, we said that summary. This one go to the financial position immediately. Don't finish. You send it there because you've done your demarcations already. So go to the financial position, the current assets, under the you recorded inventory, or if you have not recorded any inventory, record it. Inventory figure must be 45, but that's the closing value of the inventory. Second, this is the cost of sales figure, so it must go to the face. You bring it here, and then you are done. You should not finish everything before you start posting to the financial position, so that when you are done and it says stop work, at least whatever you did, you posted it both balance sheet and what the P&L. Take note of that. Then the gross profit will be gross profit is 160,000, but it's 1,605,000 like this. Now the next line we're supposed to go to where admin so much, distribution so much, then we subtract. But this is a very dangerous position. It means that all the expenses given to you, cast them. All the expenses given to you, cast them into admin and distribution. But here there's a danger. What if you had 30, 40, the total is 70? No one, it's correct, the total figure is correct, but individual is wrong. It's supposed to be 20, 50. So the 20, 50 is the correct one, but because you wrote 30, 40, it's wrong. But in total, you get it correct. So something like this, it's a bit painful. That in total is correct, but individual they say it's wrong, and no consideration. So as a result of that, we said no way, we won't do that. Because certain expenses under every condition, under that 3-hour journey, and that 3-hour journey, it might not be in the right frame to demarcate the expenses well. Some of expenses, maybe it's supposed to go to admin. You place it under distribution. Trouble. It's supposed to go to distribution. You place it under admin. So we don't need to do that. So let's take comprehensive insurance. A third party owned. How do you take the insurance? Right? Admin. Administrative and distribution what? Expenses. So put all of them together in one workings and then write them down. Now you get correct. And then we have another name that we call it. We call it operating cost. So administrative and distribution costs collectively coming together, we call it what? The operating cost. Good. So either you write the admin and distribution cost, or you can call it what? Operating cost. Good. So that you go and do one workings, all the expenses in one workings, you are done. Because if you go and do admin and distribution and then there's a figure you send to admin, another one to send to distribution. Well, you know that it's an operating cost. But classified as distribution or admin is what you don't get. Don't worry yourself. Go and do operating expenses. So that's workings number 2, right? So that would be the operating expenses. So let me start from here. Operating expenses. Workings number 2. So let's go and continue the workings. Operating expenses. So let's do it here. Operating expenses. Please, don't forget your currency. Now, when you write operating expenses, kindly pick the question like this. Hold it with your left, or the one I don't use to write, and hold the pen at the right, the one that you used to write. Then you put a pen on the paper. Start from the very first item, line by line. So, item by item. Do not do a CCC. So you watch and come and then scan through. No. Because when I give some of us the chance, we will scatter it. We'll move it around. So like one expense will be here, another one is it. Every 3 steps, there will be expenses like scattered in it. We not arrange it. So please, to avoid oversight, pick item by item. So like the way I'm going to do. So go to the trial balance, item by item. So share capital, is it operating cost? No. Debenture? No. Capital surplus? No. Just as the examiner, most often, he arrange them at one position. So if you know one, the remaining ones are also operating expenses. Unless you meet one odd item, and then that's all. So if you see one, it will continue. Yes, that's not always that will be like that. So scan through and be safe. Don't finish the exams and say, oh, this one I did not see it too. Meaning the scanning wasn't right. So scan through line by line. Income surplus, no. Building, no. Office equipment, no. Delivery, no. Depreciation, accumulated depreciation, no. You calculate the depreciation chart for the year. Inventory, corporate tax, purchases and sales, no. Wages and salary, good. Wages and what? Salary. So I'll come and record wages and salary line by line. So wages and salary. That's 252,000. Wages and then salary. 252,000. So that's the figure. Please, what if wages was standing alone, like this, wages, or it was salary standing alone? Now, if it's wages, wages standalone goes to cost of sales. Cost of sales. Wages standing alone goes to where? Cost of sales. The rest goes to operating expenses. Salaries goes to operating expenses. Wages standing alone go to where? Cost of sales. So apart from wages standalone, any other item which relate to the salaries must go to operating expenses. So take note. If like, let's go to the next question, question 3. Suffer to gain. That's the question. If you go there, if you go to question 3 right away, you will see there. Good. You see wages here, which form part of what? The cost of sales. So this is wages. It should form part of what? Cost of sales. So take note. Now let's come back to our question. Now from wages and salary, what's the next item on the list? Repairs to van, sales promotion, advert, general expenses. Everything. So like when you start with one, the remaining one follow like that. In that order. So that's why we pick the figures from. So let me record them. Yes, please, you add it to the cost of sales to be added to the cost of sales. Add it to cost of sales. If wages is standing alone, add it to cost of sales. It's a cost of sales figure. So let's continue. So from wages and salary, we have okay, so we have repairs to van 165. So repairs to van 165,000. The next item on the list happens to be sales promotion. That was 45,000. The next one is advertising expenses. All of these, there are no doubt affected. Advertising expenses is 25. The last item, general so general expenses. $130,000. So this is what we will do. Then next is to scanning. So let's go and continue the scanning. Debenture interest, no. Receivable and payable, no. Fixed deposit, no. Okay, so let's see the next item. Bank, no. Cash, no. Provision for doubtful debt. So bad debt. So we can go and do the bad debt. Here, provision for bad debt, we need a movement. So leave enough space and go and then do the working. So let me do it here. This is working is 2, so this one working is what 3. Provision for bad debt. No, they call it doubtful debt. Currency will be here. Now, all provision is the movement that goes to the P&L. All provision is the movement. So let's go to the trial balance and go and pick the opening balance from the trial balance. So the provision, open balance is 10,000. Perfect. So open balance. So let's go and then pick the closing balance from the footnote. Now note 8 stated that provision for doubtful debt is estimated to be 10% of receivable. So estimate of to be 10% of receivable. So let's find 10% of the receivable. That's the closing balance. So what's the receivable figure? So we have to find the trade receivable. So let's go up. Trade receivable is the first one. So receivable. So that's 90,000. And then 10% is for a provision. So what do we do? Great. So let's go. We leave space here and come write the closing balance down. Closing balance. Open a bracket. The closing balance is nothing but the debtors figure, which is what 90,000. So multiplied by 10%, you get what 9,000 to be the closing balance. So what should we do to the 10,000 so that we can get 9,000? Good. So 9,000. So what should we do to the 9,000, the 10,000 before we can get 9,000? It means that we have to subtract 1,000. So the movement is negative 1,000, which is which will be taken to P&L. Good. So we are calculating our operating expenses. So let's go. Right here, provision for doubtful debt. That is 1,000. Put it in brackets. As it is here, carry the same thing there. Good. As it is here, carry the same item there. So we are done with the provision. Then don't sleep. Immediately, the closing balance goes to the financial position. Preferably the trade receivable. You have to net it off against the receivable itself. So we should post the entry first before we move on. So go to the financial position, the current assets side. Go to the trade receivable, open the brackets, pick the original value, then less the closing balance. So the original value is what? 90,000. 90,000 less what? The closing balance. That will give us 81. So it means that in the financial position, the balance sheet, the trade receivable will look like this. And then kindly post it before we move on. So just bring the original figure for the trade receivable, then take off the losses from it. Good. How we've done that. So in the financial position, show workings and then put it there. Okay, let's continue the game. Now, then you ask yourself, now we are done with that of the trial balance. Is there any part of the footnote that will affect operating cost? Is there anywhere in the footnote that they've mentioned operating cost or admin expenses? Great. So which of the notes they mention admin or distribution cost? Okay, good. There's a question here for us to recalculate the trade receivable again. We said that the current asset, go to the current asset, the demarcation that you perform. Go to the trade receivable, so current asset, trade receivable. Open a bracket. What's the receivable figure? Always subtract the closing balance that you get from the receivable figure so you can know the actual receivable yet to be received. So here, all what I'll do is after the examiner here will be the 90,000, that's the receivable figure. If 9,000, I doubt the collectivity, then it means that here will be minus 9,000, and that will give us 81. So you put 81 in. So you can place what? 81 in. Then you are what? Done. Can place 81 in. Good. So basically, that is how we will look for the trade receivable. Please don't finish the exams before you say you are going to post. No, time will not be at your side. So you are doing the two at the same time. Whatever will go to the balance sheet, you've done that. So after you get the profit of the tax, only two workings that you cannot do. Okay, so that is it. Is there any part of the question where they've mentioned operating cost, or you suggest operating cost to go? There was a rent that they were owing, right? So let's go to note 6, the accruals. So the company rented office premises with effect from 1st July 2019. So here the company have to make rental payment. No, they've not paid because maybe trading wasn't all that good, so financial constraint. So all what you have to do is find a proportion which is for the reporting year, which is 6 months. So in short, they enter into the transaction or the contract on 1st July. So 6 months to the year end. So but this 6 million is for the entire year. So you have to take 6 months out of it. So let's go. So I write rent owing. Rent owing. Open the brackets. Tell the examiner that 6,000 times 6 out of 12. So that's half of 6,000. Agreed. So it will be 6,000 times 6 over 12, half of 6,000. Why is it half? Because we signed the agreement exactly. So here what do you get? Get 3,000, put it in. Then immediately another leg, it goes to current liability. So let's go and add it there. So the same figure goes to current liability. So when you go to current liability, right, rent owing 3,000, you are done. So kindly do that for me. Then let's see. Good. So you record it there. Then we are done. Then what again do we need? Depreciation. If they don't tell you where to charge depreciation, we've said it already that it must go to operating expenses. So let's start depreciation. Write a depreciation like this. Then go to the question and record the asset that to be depreciated. Sometimes not all the assets that will be depreciated. So let's go to the question and pick the asset that will be depreciated. Then note 3 says that the company's policy on depreciation of fixed assets is as follows. So office equipment, 20% on cost, 20% on what? On cost. Now 20% on cost, we say straight line. Because another name for straight line is what? Depreciation is on cost. Perfect. So here I will list the two assets, office equipment and delivery van. These are the two assets that we should depreciate. If the examiner give you specific like this, yeah, these are the assets that you are going to what? Depreciate. So you go look for the asset that will be depreciated. Write them here. So office equipment, I'll start. Office equipment. And then delivery van. Delivery van. I'll just write a name without any figure. Why am I doing this? I'm doing this because I want to know which one is easy. Then go to the footnote again. If any of them have another footnote, then it means that that one, don't do it now. Do the one that does not have any footnote because that one does not require any adjustments. So all what I'm saying is this. Check the asset that you are going to depreciate. Check first. If any of them repeats itself again, it will affect the depreciation, such as the following. So if there's any footnote that talks about office equipment or delivery van again, apart from this footnote that we are reading, then it will have impact on the depreciation. So take note. So depreciation. So which of the item here they've talked about it again? In fact, it will be like this. Anywhere again they've mentioned these two assets, office equipment and delivery van. It will be that they are buying new assets, they've top up, or they are selling disposal. Number one, number two, or three. They are doing revaluation. So check for me if one of the assets has been repeated again in another footnote. Check. It will be one of these. That they are selling, they are buying, they've done mistake. And it will always affect the depreciation calculation. So check. So let's go and check. Apart from this stating it here, is there any one again? Let's see note 4. During the year or during the period under review, an office equipment purchase on September 1st, 2015 for 5 million was sold for 1.5 million. So it tells me that they sold some of the office equipment. But we know that we don't charge depreciation a year of what? Disposal. That is it. So that's why this note is there. This note is saying that we should charge full year depreciation and none in the year of disposal or sales. Note. So that means office equipment is not free. Let's check whether we see delivery van again. Okay, no delivery van. So that means delivery van is free. So find 25% on the cost. The cost is in the trial balance. Let's go and pick the cost from the trial balance. Delivery van. Here's it. Delivery van is 800. So 800. Then you find 25% of 800. So delivery van. I'll do that one first. So 25% times 800. And that'll give us agreed. So that'll be 200,000. Perfect. So that one you are free because there's no other note. But where there's other note talking about it again and you are going to pick it, no. So now, when you are done with the free one, please do the free ones first before you go and tackle any difficulty. If you go, maybe the figure you're not getting it. Oh yeah, put your date of birth there, 9 figure. I'll put 1935 here. Add 10 to it. I've got a 9 figure. I'll move on. That's office equipment. Yes, I'll not leave it. Thank you. By here, we are going to what? Sorry. Put your date of birth inside. Because that's the 9 date. Okay. Office equipment. Now let's go and face the note that they talk about. Now that note, it was the disposer. They are selling some of what? The office equipment. So the question is this: if you are selling some of your equipment, and he said when you are selling them, don't calculate depreciation, don't depreciate it. So it means that depreciation must be based on the remaining asset, not the entire asset. So let's assume that I have three assets like this, what I'm holding. So three. So three assets like this. So three. Oh, you're not coming. Sorry. Okay, I have three assets here like this. I decided to dispose of this. And we said we shouldn't charge depreciation in the year that we dispose it of. That means depreciation must be based on what? The remainder two. That's all. So anytime there's disposal, please take off the details of the disposed asset from the asset, from the pool or the existing asset to get what? The remainder. That is all. So here, let's go and pick those details. So pick the cost of the disposed asset and subtract it from the entire cost of office equipment. So let's see. So the cost of the disposed asset is what? 5 million. Perfect. Now let's go and look at for the entire cost of the so the entire cost of office equipment is what? 750,000. And so only so to be 750,000 less because if they have 750 and now we are selling we are selling 5 million out of the 750, what will be the remainder? Times the 20%. Good. So that would be office equipment. Open the bracket. Take the overall item, so 750 minus the 5,000 now times 20%. Make sure that the depreciation that you are going to calculate, it must be based on the existing. So subtract all the items that they fought dispose of. Good. Great. So great. So you get 140, 149,000. Then you are done. Great. Is there any where again in the footnote where it will affect operating cost or operating expenses? Anywhere again? Okay, so let's scan through the footnote and see if there's other item that we've not been arranged. As soon as you are done with operating expenses, you finish the question in 5 minutes. Great, that's all. But before you create a chapter, there are some two items that they normally swing. So make sure that you've calculated them already. Number one, profit or loss on disposal. Make sure that it's calculated and then you certify that it's a loss. If it's a loss, it will go to operating expense. If it's a gain or profit on disposal, go to other income. So before you close the chapter of the operating expenses, I normally say test it and see. Now, it seems like we are done with operating expenses, but we have to test for two items. We have to test for two items. Number one, test and see whether the profit or loss on disposal will not be what? Will not be a loss or profit. So test and see. Number two, check revaluation if you have revaluation gain or loss in the question. Because revaluation gain will go to OCI. You don't need to wait to get there before you calculate. Revaluation loss go to what? Operating expenses. In fact, all losses on this earth go to operating expenses. Any loss. So don't even worry about it. All losses, irrespective of where it's coming from, go to operating losses, operating expenses. Right. So first, in this question, we don't have revaluation gain. When we read the footnote, there's no revaluation in the question. So by the disposal, so quickly calculate the profit or loss on disposal so that you know whether it is what? Whether it's profit. If it is profit, you add it to other income. If it is a loss, you add to operating expenses. Please don't go to other income before you are now come to calculate the profit or loss. What if it happens to be a loss? That means it should have affected your operating expenses. You need to cancel. Good. So take notes. Let's calculate the profit and loss. If you calculate your profit, if no waste time. No, you've done workings for the examiner. So workings number, yes, 2, 3. So workings number 4. You leave enough space. So profit or loss on disposal. Your currency. We said the profit or loss on disposal, we need two items. What are they? The proceeds, how much they sold the asset for. And then the carrying amount. But before that, we should ask ourselves, have they recorded or they've not recorded anything at all? So let's go and pick that note and see. So during the period under review, office equipment purchase for September 2015 was sold. So it was sold for 5 million. Okay, so during the period under review, an office equipment purchase on 1st September for 5 million was sold for 1.5 million. Good. So the last sentence says that this transaction is not reflected in the trial balance given above. All what they are trying to tell that they've not recorded anything. So let's calculate the profit or loss on disposal. First, we bring the proceeds. By check, if they have not done anything, we said these proceeds must be added to cash. Let's go to the cash. Let's go and add it before you forget. So go to the face, go to the current asset, one of the spaces that you provided. Write there cash and go to the trial balance and pick the cash balance and add it to it. So let's pick the proceeds. So the proceeds is 1.5. So that will be 1,500. So this 1,500, add it to the cash balance. Now let's see this question. The cash balance is what? This is the cash balance, 13,000. Good. So the cash balance here is 13,000. So add it to it. What if there's no cash? Then you can decide to write it to the bank, or you can create column for what? Cash. So let's add it to cash. So kindly go to the current assets where you left some spaces, about 3 to 4 spaces that you left there. Kindly include current, how do you call it? The cash. I hope you've done that. So this means that the cash balance that will be used in the financial statement will be 14,500. Good. I hope everyone have done that. So if you have done that, let's continue. Now proceed less the carrying amount of the asset. So proceed less what? Carrying amount. How do you find carrying amount? Carrying amount is what? Cost times what? Cost minus accumulated depreciation. So I'll start examining our cost. What is the cost of the disposed asset? The cost of the disposed assets was 5,000. I'll put it here. Less accumulated depreciation. How do I get accumulated depreciation? I need to get depreciation for a year and multiply it by the number of years they've traveled. Okay, so the cost is 5,000. Let's calculate depreciation per year. So then what are the number of years they've traveled? Now, what we have to bear in mind is office equipment. And with the office equipment, what is the depreciation policy on that? What the depreciation policy? It's 20%, right? Good. So it's 20%. So let's find depreciation for a year. Now let's go and pick the number of years. So kindly tell me the number of years. Now they bought the asset April, September 2015. They bought the asset September 2015. And then it doesn't matter which month they acquired the asset, they still charge full year depreciation. So that means to get accumulated depreciation, we have to start counting where they bought the asset till now. Don't forget to exclude the current year because we don't depreciate the asset in a year of what? Disposal. Or when the assets are sold, we don't calculate depreciation according to the footnote. So let's do the accounting together. Great. So 2015 will be 1. 15 will be 1. 16, 17, and 18. 19 will not be part. So let's write here small. So it will be 15, 16, 17, 18. Perfect. So 4 years. 19 will not be part because we don't charge depreciation in the year of what? Disposal. Good. So we know that it's 4 years. Let's get a depreciation charge per year. For office equipment, the depreciation charge is 20% per annum. So that means the accumulated depreciation will be, open a bracket, tell the examiner that it is, or it will be 5,000 times 20%. That will give us 1,000. And that is the accumulated depreciation That's the depreciation charge for a year. Then you multiply this. You multiply this by the number of what? Years. So let me extend it here so that you can get some space. So 5,000 times 20%. Now times what? 4 years because of the accumulation. And this one give us what? 4,000. Because each year is 1,000. And now it's 4 years. So the accumulated depreciation will be 4,000. Right. Then you subtract it like this. Whatever you get is a current amount. So the cost minus accumulated depreciation will give us the current amount. Before we can come and then put it here as current amount of 1,000. So the company record profit or the record gain. So you have an asset. The current value is 1,000, but you sold it for 1,005. So here there's a profit of what? 500. So here there's a profit of 500. Agreed. Why profit? They sold it for much higher than the current cost or the current value. Okay, so once there's a profit, so let me find somewhere to. So let's write here loss on disposal. Sorry, it's not loss, so should be profit on disposal. It's a profit, not a loss. So profit on disposal, which is 500. So which is 500. This 500 go to other income. It ends there. Okay, so that means on that note, we can comfortably close the chapter of the operating expenses because once the profit here, it will not affect the operating expenses. So let's comfortably close the chapter of the operating expenses. So let's go and close the chapter. So now let's add all the operating expenses together. Let's add all the operating expenses together. Kindly let me know. Wait, so you get something like 968,000. So 968,000. Then that's the end of the game. So let's go and put it on the face. Kindly take this section off. I may take it. We need it in the next workings. Great. So operating expenses, we've done it. Working number 2, which is 968,000. So what will be the operating profit? Good. So let me take this section off. Now you go to operating profit, in which we had 637,000. Then from operating profit, you go to where? Other income, right? let's go and do the workings for other income. So let's go and do the workings for other income. So that'll be workings number. This one was workings number 4. So this one's around 5 there, right? Yes, you can also follow the number. Now, other income, usually forget this 500. So I'll write that one first. The profit on disposal 500. So profit on disposal 500. Let me do that one here. So profit on disposal. So workings number 5, other income. So profit on disposal, which is 500, right? Let's see. Then which one again? Let's come to the trial balance. If you see any results, if we see any other income, let's bring it. Let's go ahead and scan to the trial balance. If you see other income in the trial balance, let's go together. So let's go to the trial balance. Okay, so interest on fixed deposit. That's other income, 5,000. So interest on fixed deposit, 5,000. Then the differences in the fair value that we talk about. Which of the notes that talks about the fair value? Good. Then let's go ahead and then look at the fair value gain. So we talk about the fair value gain. The fair value gain of the bracket, the 1050,000 minus the 100. So that's the fair value gain of what? 50,000. Putting all this together, all you get 55,500. That's the total other income. You come here, come and put it there, 55,500. So what's the total profit? So this is the profit before interest and tax, PBIT. So after we take it, after we add it, fair value gain should not be subtracted, it's a positive. But even if it's subtracted, you get 55. In fact, if you subtract, you get 55. So you have to add the fair value. So that's why we added and then we had a 55,000. Good. So it must be add because a gain, not a loss. So 692,000. So that's the profit. 692,500. So this will be the profit before interest and tax. So someone have a question. Let's go and then pick the question up. The next level is come to interest. So interest will be, yes, interest expense or finance cost, any of them, or your finance cost. So that one we said it includes the following: one, interest on overdrafts, interest on debenture. So here, if there's any debt instrument, non-current liability, that if assign percentage to it, we have to calculate that. Good. So if you go to the face, let's go and check the debenture. 20% debenture, so we can calculate the interest ourselves. Once the percentage is there, we have to calculate the interest ourselves. So 20% on the 400,000, that will give us 80,000. So that's the interest expense. The first we calculate it to be 20% times 400,000, and that will give us 80,000. You less, and then what do you get? Get 612,500, and that's the profit before tax. Good. Then what do? As soon as, with the respect of this, go to the trial balance, search again. Do you see interest on debenture in the trial balance? If you see interest, the trial balance, it represents the proportion of the dividend that they've paid. So let's go and see whether they've paid some or they are owing all. But for the P&L to not be affected, so let's take note. The P&L will not be affected. The P&L will not be affected. So if you check debenture, so interest, debenture interest, 40,000. So it means that they paid 40. So 11 what? Another 40. So they are owing. So immediately, then you send it to a current liability. So let's go to current liability and record that owing. Out of the 80,000 that they're supposed to pay, they've only so out of the 80,000, they pay what? 40. So go to current liability. Can you go to current liability for me and write again? Interest on debenture owing. Open a bracket, 80 minus what they've paid, 40. Put the answer in as 40. Then you are done. So can you do that on the financial position for me? Okay, so if you have done that, that's good. Now let's go to the last aspect. This profit before tax. So finally, finally, income tax expense. So income tax expense. For the income tax expense, we said we should go and calculate CUD, the card. And we did that under where we were explaining the issues one after the other. So we can just pick them here and then look at them again. So it says CUD, card. The current year we had 240,273. That's the current year tax provision. Kindly write in full current year tax provision. And now over this question, which was dash when we're looking at it. The deferred tax we paused and went to do workings on the deferred tax. So we said that the deferred tax, you have to now compare the open balance. Open balance is dash. Closing balance of the deferred tax. That's where they gave us the taxable amount of 12,000. That's the accounting base of 12,000 less the tax base of what? 9,000. Before you multiply by the tax rate, we had 750, so we keep that 750 in here, and that 750 becomes non-current liability. So kindly sum them up. When you add these two together, that's what goes to the profit and loss account. Okay, please, which of them? Okay, so if you should go over again, more. So we said that the deferred tax calculation, so deferred tax calculation, relax, get the open balance, we scan to the trial balance, no open balance, we dash. Leave a line, come to closing balance. The closing balance, we compare 12,000 less 9,000 times 25%. So we had 75,000. So just 75. Okay, so we are saying that the movement, the difference between open balance and closing balance goes to the financial, the P&L as an expense. So that's why we posted it here. Then you sum these two up. Good. Then you get something like 241,125. That's the income tax expense taken to the P&L. So this one is the income tax expense taken to where? P&L as the income tax expense. Good. It will be 241,125. For that figure there, let's really confirm the figures because I doubt one of the figures. It's 24375. 24375. Yeah, there must be 375 here. And here must be 3. Okay. That is it. Then immediately, don't rest. Send this figure to the non-current liability. So the 750. Deferred tax, the closing balance, either non-current liability or non-current assets. So send it to non-current liability. So let's send the deferred tax. So I hope you've done that. You've sent to non-current liability, 750. Agreed. Agreed. So we send the closing balance of the deferred tax. The closing balance is this one. It's a 750. Great. So you have to send it to the financial position. Okay, so I'll put this figure here as 241,125. Next, what will be the profit after tax antipart? In fact, the deferred tax balance, the closing balance is a non-current liability. It must go to non-current liability. So kindly go to non-current liability and write deferred tax. Then put 750 there among the non-current liability. Okay. Which side? So the total that we did here, the workings, maybe it was working 6 income tax expense. Let me do it over again. Income tax expense. We start with the current year tax. So current year tax. So the current year tax is what? We have 240,375. Under or over? We don't have some in this question. Deferred tax. We paused. And then we did another workings again. We said that deferred tax working. So deferred tax. Open balance dash. Closing balance. We open a bracket. We said that the accounting base is 12,000 and there's a tax base of 9,000 times 25%. So closing balance. Open a bracket here, 12,000 minus 9,000 times 25%. And now we had 750. So we balance it. So we ask ourselves, so what should we do to this so that we can get 750? Okay, we should add 750 here. We call it P&L into bracket to beside income tax expense. That's where to go. So when posting this 750, come and record it here as 750. Add this one together and get 241,125. And that's what I'm going to put here as what? As the income tax expense. Then finally, send this up to a non-current liability. That's all. Non-current liability. Then, can you get me the profit after tax? Then we go to the same tax issue. We did some workings and we find out how much they should pay. So the tax that they are going to pay. Because the tax that they are going to pay, there's one item that we're supposed to post, we did not post. There was a building, we've checked building. They had there was a figure that we've come across, the fair value gain of the fair value gain. I think I want to post that one first before I come and continue. We had 1050 million like this. Can you post that figure? Go to the non-current below the non-current assets or below the PPE. You left some space be there. Right? Investment property into bracket building. Investment property into bracket building and put this together because we said to go to the balance sheet as this. You don't need to finish before we start the posting. No, that might not be at our side. You have to post them along that. You do this once more, doing this once more. Okay, so how we've done that. Great. Okay, so you posted this. Now when you go to the current liability, They said that they were owing. They said that they were owing for tax arrears. So what do? You add the arrears to what they've owed today. So we are done with this. So if we have posted the deferred tax, we can calculate the tax liability. So outstanding tax liability. Tax liability. First, open balance 20,000. Current year charge 240,375. Then tax paid. Let's go and pick the tax paid from the question. So tax paid, why are you? Tax paid, why are you? So tax paid, you have to look at it. Oh. Good. So corporate tax paid is here, 165,000. So out of the total amount that they owe, they've able to what? Paid 165. So less tax paid of 165,000. You take off this, you get 95,375. And this one goes to the financial position as current liability. So let's send this to the financial position as what? Current liability. Okay, so someone have a question here. Great. So we said that this is outstanding tax liability because at the start they have some arrears to clear, which is 20,000. This year to they made a provision, which is also a liability. But they paid 165,000. Okay, then let's take it from their total. Whatever remains, it will still be tax liability. Tax liability, which will go to where? Which will go to the current liability. So good. So add it to the current liabilities. Perfect. So on that note, we are done with the profit and loss. So now that we are done, let's just consolidate. So we are done. Then we now we now continue the game. So what's the profit after tax? I'm continuing it. Here there's no space here. Let's go down more so that you can see. So I can continue from here. So profit after tax. What is antipads? The figure. So profit after tax will be 371,375. Agreed. Is that so? Yes, that's where we are going. We are going to the comprehensive income. But we need to get a profit after tax first. This is the income tax. You have to subtract it. So that's what I've written here. So can you confirm for me? Because this profit is a guesswork. I just guessed the profit afterwards. So profit after tax. I hope it's correct. So yes, it's correct. 371, 375. Then you say other comprehensive income. Other comprehensive income. Bring it and put dash there. Bring it and put your dash. And tell the examiner total comprehensive income 371, 375. And that's the end of the profit and loss. Now let's now if you have posted everything, it's left with only two items that you need to post, then you are done with the game. So we'll post everything here and try and balance it. If you have posted everything that I asked, you should left with basically two items that is not that. Can we go to the changes in equity quickly? I want to finish every part of this question. Can we go to changes in equity quickly? Can we do that? Change in equity quickly. Okay. Now, okay, I'll clean this side and do it here. I'll clean this side and do it here. So that I'll be a bit fast here. So to get a change in equity, the heading was there. So let me see. Statement of changes in equity for the year ended December 31st, 2019. Now, look for the equity items. Kindly look for the equity items in a question to get the changes in equity. The equity items are three: ordinary share capital, income surplus, and retained earnings. So take notes. So first, in this question, you have share capital. So write share capital here. Share capital. Second, income surplus. So income. But let me detail that we don't go there. So share capital here. Income surplus. Capital surplus. Then their total. Your currency, don't forget about the currency. So GH, let's not go there. So the currency will come. Then we start with the open balance. The open balance, go to the trial balance and copy all these items that you see there. So share capital in the trial balance is 1.5 million. Like this. Income surplus is what? Check the income surplus, the balance. Good. You have to be a bit careful about that. If you check the income surplus balance, let's go and check it from the question. Share capital is 1.5 million here. Capital surplus is what? 100. Income surplus is what? 95. It's a debit. Debit means they have had a consistent loss, so it has cleared the good balance. So loss, put it in brackets. This is negative, so put it in bracket, this figure. It was supposed to be a debit, and now it's at the what? It's supposed to be a credit, but now it's a debit. So let's make it what? Onto yourself. So 95,000, and you put it in bracket. Capital surplus, it was 100,000. Can you total them? This plus this minus this plus this. Answer, you put it here. So can you get the total section? Then write your profit after tax, antipart, dash. Profit after tax is 371, 375. The same to come here, 371, 375. Then dividend, less dividend. Dividend, do you have dividend? So let's go and try and see. The one in the trial balance usually is the interim dividend. So interim dividend 40,000. So dividend is 40,000. So write it here and you subtract it. Dash dash. So 40,000. So I think that's all for changes in equity. But expect more items going to it. Example, the revaluation. Revaluation gains go to change in equity. Now when you are done, you put all of them together. So you total them. That's the end. This one will still give us 1,500. Then you sum this one also up. So what you get if you sum them up? Good. So what will be the total for this? The income surplus? Negative 95,000. Why negative? Because we'll debit plus the profit made for the year. The dividend, let's subtract the dividend because we are making a payment. So 316,375. Capital surplus is still 100,000. So 316,375. Capital surplus is 100,000. Can you sum this one up? Yes, someone had 31. It's 23635. Wow, I like that too. So 2 3. So 23675. Agreed. Okay, can you confirm this figure? This 23 for me. Okay, so we continue the game. Okay, so someone confirm it. Great. Then we sum them here. This plus this plus this plus this. So if you go to the financial position, the balance sheet, These are the closing balance we are going to use in the books. So if you pick, so let's go to our total to here, summation of this or this side. So go in and then include these figures in the changes in the equity section. So total capital, pick this, income surplus, pick this one, and then we are done. Left the last workings, which is the PP. So on this note, we'll go and do the PP to end the game. Now the PP workings, the shortcut approach that we will use to get a PP. So at this venture, I left with only one working. So PP. Let's use the PP smart way. So the next working I'm going to do is on PP. So big workings number, let's say 8. PPE. Now with the PP, all what you have to do is the smart way. Bring the cost here, bring the accumulated depreciation here, and start. Maybe office equipment. Office equipment. Then delivery van. So what's the cost of the remaining? Don't forget that the office equipment was the one with the 750. That is sold 5. So let me do it 745. So now the cost will be 745,000. This is the current amount. Let me shift this one here small. Okay, so what you have to do is this. Get the accumulated depreciation. The accumulated depreciation. How do you get the accumulated depreciation? For this one is 1,000. Now the accumulated depreciation, this is what you do. You do a separate workings for it. That's what you call the remover. So first, to get the accumulated depreciation, first tell the examiner that what's the opening balance. If I put the office equipment here, what's the opening balance of the accumulated depreciation charged on that asset so far? If you check the trial balance, it's 150. Then tell the examiner less the accumulated depreciation of the disposed asset, which was the 4,000. We said all the details must be removed or cancelled. So this is how you are cancel the details. Then you add the charge for the year to it. Charge. Depreciation charge on that of this was 149,000. So the question is, what's the total accumulated depreciation? This will give us 146. So, or to give us 195,000. So you'll be 195,000. Do the subtraction. You get 450. We go to delivery van. That one straightforward. No issue. The cost is 800. Then accumulated depreciation. Check the trial balance. They've checked 200,000 in a trial balance. Great. So this is okay, it's 295. Yes, not 195. So putting everything, so 295,000. So come and put it here as 295. So this minus this give us the current amount. For that of the other assets, for that of delivery van, the cost was 800. That one, the accumulated depreciation, so van, accumulated depreciation brought forward. The open balance happened to be 200 in the trial balance. They did not sell any of the vans, so they will not have any disposal. So that charge for the year was also 200. So putting everything together is what? 400. If it is 400, then we come here. Accumulated depreciation is what? 400. You put in bracket, take it from this, you get what? 400. Now, if it is 400, then what do you do? Add them. So you get 850 as the total PPE. So when you go to the face, then you record this one in the PPE. That's the PPE, taken to the financial position. So let's record all this must be done within 30 minutes. So that is it. So PP 850. So when you put the PP in, issue balance. So the first person balancing his own. Make sure that so it means that non-current asset there are two items there, PP and the investment property. PP and what? Investment property. That's the building. That's the only two items that will be in the non-current asset. Then you come to current. Okay. Now there was an investment in there. Good. So if they don't tell us that it's long term, you add it to the current assets. So let's where we left some spaces, right? There's investments, fixed deposit, fixed deposit. So let's add that one to the current asset. Then we are done. So find somewhere to add a fixed deposit to the current asset. So current asset, the space that you left, there must be a section for the fixed deposit. What's the figure for the fixed deposit? Let's go and pick it from the trial balance. So the fixed deposit is of, so investment, this is the fixed deposit is of, so 210. So can you bring it at the current asset is 210 at the current asset. So can you create a column for it? Okay, so if you add every, now we are done with this very one. The next set of the question is the suffer to gain. That one where they prepare a financial statement, then they prepare it, not that it's too wrong, no, the format, presentation. So they say read draft the financial statement of suffer to gain limited in the form suitable for publication required by the International Financial Reporting Standard and by the company's code. Okay. So So affecting these notes, affecting these notes. Great. If you're able to go through this one, you should be fine. Kindly go through this one for me.